You know that feeling when you look at a stock chart and it's just pure chaos, right? Well, what if I told you there's a tool traders use to find a hidden rhythm inside all those wild swings? Today, we're going to dive into how to master those market rhythms using a really powerful concept, Fibonacci retracements.
Yeah, I mean, you look at a chart and it's just spikes, dips, these totally unpredictable moves. It feels random. So the big question is, how on earth do traders find those potential turning points to actually make a move? Well, that's the puzzle we're going to tackle right now.
Okay, so here's the game plan. First up, we're going to decode what these market rhythms are all about. Then we'll get into the so-called magic numbers behind the whole thing. After that, we'll talk about working smarter, not harder, by combining tools. And finally, and this is super important, we'll do a reality check. This thing is a tool, not a crystal ball.
All right, let's jump right into part one, decoding market rhythms. So let's get down to it. What is a Fibonacci retracement? Let's break it down into simple terms. So at its heart, it's a tool that helps us find potential support and resistance levels. You know how prices never just shoot up or down in a perfectly straight line, right? They surge, and then they pull back a little bit. They retrace, and then they might continue on their way. Well, Fibonacci retracements are like a map that helps us guess where those pullbacks might just run out of steam and turn back around.
And actually using it is surprisingly simple. It's really just a three-step deal. First, you got to spot a clear trend on the chart. Then you find the very top and the very bottom of that move. Traders call this the swing high and swing low. And finally, you just use the tool to connect those 2 points, and boom, your software draws all the important levels for you. Super easy.
Okay, so the lines are on the chart. Now what? What do they actually mean? That's what we're getting into in section 2. We're going to look at the magic numbers that make this whole thing tick and figure out which levels traders are really paying attention to.
So these are the big ones your tool is going to draw. 23.6, 38.2, 50, and 61.8%. And what's wild is that these numbers aren't just pulled out of thin air. They actually come from the famous Fibonacci sequence. You know, that pattern you see all over in nature? The whole idea is that these same ratios might reflect the collective human psychology of the market. That's why you'll see traders using this stuff on everything from stocks to Forex to crypto.
And that is the key thing to get. These levels aren't magic. They're all about psychology. Think of them as zones where human emotions, and a ton of trading bots, by the way, are basically programmed to react. So as the price gets close to one of these lines, you often see a big spike in buying or selling, and that can cause the market to hit the brakes or even flip around.
Okay, so all these levels matter, but there is one that really stands out from the crowd. Seriously, if you take away only one number from this whole thing, make it this one, 61.8%. For many traders, this is the big kahuna, the most significant level of them all.
So what's so special about this number? Well, it's because 61.8% is directly related to the golden ratio. Yeah, that golden ratio. The one that pops up everywhere, from the shape of galaxies to the spiral in a seashell. And honestly, for reasons we don't totally get, financial markets seem to respect this level a lot. That makes it a super critical zone where traders are watching like hawks for a reaction.
So these levels are awesome clues, right? They tap into the market psychology. But, and this is a big but, they are never ever a guarantee. And that brings us perfectly to our next section, a real pro tip, how to trade smarter, not harder, by using other tools to confirm what you're seeing.
I like to think of it like this. A single indicator is kind of like trying to balance on a one-legged stool. It's shaky, right? Relying on just one thing is super risky because you can get so many false signals. If you really want to build a strong case for a trade, you need a few different reasons to believe in it. Bottom line, Fibonacci works best when it has some friends along for the ride.
So what does that actually look like on a chart? Well, imagine the price is pulling back and it lands right on a key Fibonacci level. Okay, cool. But what if, at that exact same spot, it's also hitting an old support level? And maybe there's a big trend line running through there too? When you get a bunch of signals all pointing to the same price area, that's what traders call confluence. And that, my friends, is a high probability zone. It gives you way more confidence that you might be onto something.
And that word right there, probability, is the perfect lead into our final and maybe most important section. We have to talk about managing expectations. Because no matter how powerful this tool is, and it is powerful, it is not a crystal ball.
Look, here's the bottom line. We have to be crystal clear about what this tool can do and what it absolutely can't. What it offers is a fantastic framework for planning your trades and managing your risk. It helps you pinpoint these potential hotspots, but here's what it doesn't do.
It doesn't guarantee a single thing. It can't predict the future, and yes, it will fail sometimes. The goal here isn't to be right 100% of the time. The goal is to use this tool to stack the probabilities in your favor. That's what trading is all about. It's a game of odds, not guarantees.
So, when you boil it all down, Fibonacci retracements just give us a way to kind of listen in on the market's hidden rhythm, that natural ebb and flow within any trend. It's like a roadmap of potential turning points, built on these universal patterns and really on human psychology. Now, it's not going to give you all the answers, but it will help you ask much smarter questions about where the market might be headed. So, now that you know the rhythm, are you ready to master the market?